The $100 seed planting your financial future. You have $100. That's awesome. It might seem like a small amount, but it's a powerful start. It might not seem like much, but it's your seed for a brighter financial future. Just like a tiny seed can grow into a mighty tree, your $100 can grow into a substantial investment. Many people think they need thousands to start investing. That's simply not true. Even with a modest amount, you can begin your journey towards financial independence. With just $100, you can dip your toes into the world of investing and watch your money grow. It's all about taking that first step and being consistent. Investing is like planting a tree. It requires patience, care, and time. The sooner you plant, the stronger and taller it grows. The earlier you start investing, the more time your money has to grow. The same goes for your money. Small, consistent investments can lead to significant growth over time. With time, even small investments can blossom into something amazing. It's all about the power of compounding. This is the beauty of compound growth. Your money earns interest, and then that interest earns interest. It's like magic, but better because it's real. The longer you let your investments grow, the more impressive the results. Think of this. You invest $100 today. It's a small start, but it's a start nonetheless. With a solid return, it could grow significantly over time. Imagine the possibilities as your investment grows year after year. That's the power of starting early. The earlier you begin, the more time your money has to grow and multiply. In this essay, we'll break down investing into simple steps. We'll guide you through the process, making it easy to understand and follow. You'll learn how to turn that $100 into a powerful tool for your future. Let's get started on this exciting journey towards financial growth and stability. The early bird gets the nest egg, the power of time. Time is one of the most crucial elements in the world of investing. Time is your secret weapon in investing. It allows your money to grow and multiply in ways that can seem almost magical. The earlier you start, the more time your money has to grow. This is because of the power of compound interest, which can turn small, consistent investments into substantial sums over time. This is where compound growth comes in. It's the process where the money you earn on your investment starts to earn money itself. Compound growth is like a snowball effect. As your investment grows, it picks up more and more returns. Just like a snowball rolling down a hill gathers more snow, your initial investment earns returns. These returns are then reinvested, earning even more returns. Then those returns earn even more returns, and so on. This cycle continues, creating a powerful growth engine for your investments. Imagine this. You invest $100 at a 7% annual return. It might not seem like much at first. After the first year, you earn $7, bringing your total to $107. This is just the beginning. The next year, you earn 7% on $107, not just the initial 100. This means your returns are also earning returns. This snowball keeps rolling, growing bigger and bigger over time. The longer it rolls, the larger it becomes. The longer you invest, the more dramatic the results. Time amplifies the growth of your investments, turning modest sums into significant wealth. Starting early allows you to take advantage of this powerful force. Even small amounts can grow substantially if given enough time. Don't let anyone tell you it's too late to start investing. While starting early is ideal, starting now is better than not starting at all. Every dollar you invest today is a step towards a more secure financial future. The power of time and compound interest can help you achieve your financial goals. Your financial compass. Charting your course with investment goals. Before you invest a dime, ask yourself, what am I saving for? Clear goals give your investments purpose. They help you stay focused and motivated. Are you saving for a down payment on a house? Do you dream of early retirement? Maybe you want to travel the world? Write down your goals and how much you'll need. This gives you a target to aim for. Your goals will also influence your investment choices. Short-term goals, like a vacation next year, need safer investments. Long-term goals like retirement can handle more risk for potentially higher returns. Remember, your goals are unique to you. Don't be afraid to dream big. Having clear goals transforms investing from a vague concept into a tangible path towards your aspirations. ETFs, your ticket to diversified investing. ETFs, or exchange-traded funds, are like baskets of stocks. They let you invest in a variety of companies with just one purchase. Think of it like buying a slice of the entire stock market. One popular ETF is the S&P 500 ETF. It tracks the performance of 500 of the largest US companies. This diversification spreads your risk. Instead of putting all your eggs in one basket, you're investing in many different companies across various sectors. ETFs are known for their low fees and ease of trading. They're a great option for beginners because they offer instant diversification. With ETFs, you can start building a strong investment portfolio with just $100. Section 5. Owning a slice of the pie, fractional shares and big dreams. Ever wanted to own a piece of a big company like Apple or Google but thought it was too expensive? Well, fractional shares make it possible. With fractional shares, you can buy a portion of a single share. This means you can invest in companies with high share prices, even with a small budget. Let's say a share of company X costs $1,000. With fractional shares, you can buy $100 worth, even though it's only a fraction of the total share price. As the company grows, so does the value of your fractional share. Fractional shares make investing more accessible. You can build a diversified portfolio with companies you believe in, regardless of their share price. It's a game changer for small investors. Section 6. Robo-advisors, your automated investing allies. Don't know where to start with investing? Robo-advisors are here to help. These digital platforms use algorithms to manage your investments based on your goals and risk tolerance. You answer a few questions about your financial situation and goals. The robo-advisor takes it from there, building and managing your portfolio automatically. They invest in a mix of ETFs and other assets to create a diversified portfolio. Robo-advisors are great for hands-off investors who prefer a simplified approach. They typically charge low fees and require minimal investment amounts, making them perfect for beginners. Section 7. Baby steps, giant leaps, tips for newbie investors. Starting your investment journey can feel overwhelming, but with the right approach, you can navigate it successfully. Starting your investment journey can feel overwhelming. It's normal to feel a bit lost when you're just beginning. Remember, you don't have to be an expert to get started. Here are some tips to help you on your way to becoming a confident investor. Start small and be consistent. Even small, regular investments can grow significantly over time. Investing is a marathon, not a sprint. Patience and persistence are key to seeing your investments grow. Invest what you can afford consistently, even if it's just $10 a week. Diversify your investments to spread risk. Don't put all your eggs in one basket. Diversification helps protect your investments from market volatility. Spread your risk by investing in different asset classes like stocks and bonds. Keep your fees low to maximize returns. Fees can eat into your returns. Always be aware of the costs associated with your investments. Look for low-cost investment options like ETFs and index funds. These can help you save on fees and improve your overall returns. Don't panic sell. The market goes up and down. It's important to stay calm and not make hasty decisions based on short-term market movements. Don't make rash decisions based on short-term fluctuations. Stay focused on your long-term strategy. Stay focused on your long-term goals. Remember why you started investing in the first place. Investing is a learning process. Continuously educate yourself to make informed decisions. Don't be afraid to ask questions and seek guidance when needed. There are many resources and professionals available to help you on your investment journey. Section 8. The long game, patience and consistency in the market. The stock market is like a roller coaster. There will be ups and downs. Don't let short-term fluctuations scare you. Investing is a long game. Remember the power of compound growth. The key is to stay invested for the long haul, even when the market gets bumpy. Over time, the ups tend to outweigh the downs, leading to long-term growth. Patience and consistency are your allies in investing. Stay the course, ride out the market fluctuations, and you'll be amazed at how your investments grow over time. Section 9. You can do it. Taking charge of your financial journey. Investing isn't just for the wealthy. It's for anyone who wants to build a more secure financial future. You don't need to be a financial expert or have a ton of money to get started. With just $100 and the right knowledge, you can begin your investment journey today. Remember, investing is an act of self-empowerment. It's about taking control of your finances and creating a brighter future for yourself. Don't wait for the perfect time to start investing. The perfect time is now. Take that first step, invest that $100, and watch your financial future blossom. Section 10. Resources, your investing toolkit. Here are some resources to help you on your investing journey. The Boglehead's Guide to Investing. This classic book offers a simple, low-cost approach to investing. Investopedia, a comprehensive online resource for investing education and information. Your bank or brokerage firm. Many financial institutions offer educational resources and investment guidance. Remember, knowledge is power when it comes to investing. Take advantage of the wealth of resources available to empower yourself. Section 11, start today. Your $100 adventure awaits. You've learned about compound growth, ETFs, fractional shares, and more. Now it's time to take action. Don't let that $100 sit idle. Open an investment account, choose your investment strategy, and take that first step towards financial freedom. Remember, investing is a journey, not a destination. Start small, be consistent, and enjoy the ride. The world of investing awaits. What are you waiting for?